Welcome, ladies and gentlemen, to this chapter titled Sustainable Investors' Preferences. My name is Marco Menichetti, and I'm very happy to guide you through this chapter, and I hope you will enjoy it. Let us have a look at the table of contents of this chapter. The first section is on the importance of investors' preferences. We then pass to methodology for measuring preferences, and the next section is knowledge on preferences of conventional investors, which is followed by expected changes for sustainable investors. We will then go through a short literature review where we will discuss 3 selected papers, and finally, this chapter will end with a reference list. Let us now start with the first section. Well, you see that I tried to visualize many, let's say, advertisements on sustainable investments. Without a knowledge on investors' preferences, the target group oriented communication is not possible. So knowing the preferences is extremely important. What do we already know about the preferences of traditional investors so far? Probably you all know already a lot about traditional investors from theory and research. In a nutshell, we have expectations about financial characteristics like return, risk, correlation, and so on. These are the most important criteria for financial decision making. So if we just look at that first point, then we can say, okay, this is given. We know everything about that. But now, what do we really need to know about investors' preferences on sustainability characteristics? What we already need is knowledge, or what we really need is knowledge on how to evaluate the different levels of E, S, and G. We need to know how sustainable investors evaluate the value of activities according to the 7 sustainable investment strategies, like positive, negative screening, sustainability themes. The impact of projects and of SDG investing for sustainable investors. And another issue is how investors evaluate the knowledge on the comparability across sustainability projects. Would it be helpful to know something about the preferences? Yes, it would be very helpful, because then this could support product development and all kind of marketing activities. Well, this slide gives us an overview on the spectrum of investments. Coming on the slide, if you look at the slide on the left side, coming from conventional finance and working towards sustainability, and at the right end you have philanthropy. Philanthropy is no more a part of sustainable investing. In sustainable investing, the investor expects to reach environmental or social goals with the investment. But repayment and a return rate are integral parts of this goal set. Philanthropy is no investment. It is defined as giving gifts. That could be time, that could be talent, or money to help making life better for other people. It is a donation, often without the obligation of an entire repayment of the capital. Have a look at the first line. This starts at the left with financial only, then followed by responsible, sustainable, and then impact investing. And the impact exists in two different forms. You see it. It's finance first, impact investing, and impact first, impact investing. But even impact first is unequal to philanthropy. Check this table on your own. Try to understand it. Take the time. It's quite important and gives a real good overview. The graph on this slide 6 is a more simplified version compared to the last slide. Here we see on the x-axis the target social and or environmental impact, which is either 0 or very high. And on the y-axis, we have the financial return from 0 to very high. You find the position of solely profit maximizing investing with no or low impact and high financial return. You find philanthropy on that in that system with no financial return and high impact. You find financial first impact investing with a high financial return and a middle impact result, but impact first investors with a high impact and with a lower financial return. So this is also a very good overview, and check it another time, think about it, and we go on. For whom is it important to know about investors' preferences? This is the big question. And first of all, governments are interested to know the sustainable behavior of their own population. One example is the development of laws, like the regulation for financial markets, with which we are confronted at the moment here in Europe. The second is business units of companies. They could use this information to improve their business, their own business. In product development and for product differentiation, they would know what category of sustainability to focus on, and they would be able to find the best balance between financial and sustainable aspects. Product issuers could use this knowledge to improve their profitability by generating the highest possible margin and earning the highest possible consumer rate. Now we approach the last slide on investors' preferences. Generally, we can say that investors do not form a homogeneous group, but they consist of subgroups different from each other because of different preferences. This is also the case for sustainable investors. And let us have a look at possible attributes for especially sustainable investors' preferences with the help of the following list. And let us go through that list that could be components of sustainability specific aspects. As an example, aspects of ESG or of CO2 emissions or SDG goals and so on. That could be financial goals like return, risk, liquidity, beta, Sharpe ratio, tracking error, and so on. Another important characteristic could be the type of issuer, which could be government, a bank, or a manufacturing company, and so on. The type of capital and its management could be another issue, as there is the choice between shares or stocks, bonds, indirect investment, active versus passive management, and so on. The country of investment could be an important attribute, as well as the investment horizon or the duration of the investment. An important attribute is the sustainability level reached by the investment. This level depends on the use of one of the 7 sustainable investment strategies. You will learn about that. Some strategies lead to very high sustainability levels, and others lead to very low sustainable levels. The last point which is on our list here is investors' expectations about the details of reporting, respective the certification about the sustainable use of financial means. So we come back to our table of contents and we now approach the second section titled Methodology for Measuring Preferences. Most of the existing literature measuring preferences applies quantitative questionnaires combined with choice-based conjoint analysis. Bell et al. In 2019 list 2 general forms. First, the self-completion, self-administered questionnaires with paper-based questionnaires answered by respondents directly. Or the second, web-based surveys, which means online surveys, where the website address is sent to participants via email. Questionnaire design and the sampling method is fundamental to answer the research question appropriately. Especially the sampling method should be selected very carefully. The conjoint analysis was originally developed by Green and Rao in 1972. The basic ideas are first the creation of different choice sets, which we call profiles. They represent hypothetical products and or services with different characteristics. Second, products are decomposed into attributes, which we could also call characteristics, each with different levels to estimate how much each consumer in a sample values each attribute level for all attributes. Therefore, the appropriate attribute selection plays an important role. Third, based on participants' choices, the relative importance of each attribute can be measured and or calculated. On slide 12, we find an example for preferences regarding credit cards. The selected attributes in this example are listed in the first row. These are card issuer, annual fee, interest rate, and credit limit. And suitable levels depend on the respective attribute. Here we have 4 levels per attribute for all attributes. Yeah, so check it, have a look at it. We go on. On the next slide, we characterize utility values and the purpose with regards to sustainable preferences. Let us start with utility values. We can say that for each group's participant's choice, utility values are calculated and aggregated to measure the utility for each attribute level. Those partial attribute values are called part-worth values. The utility of a product is obtained by summing up the part-worth values of its specific attribute levels. Let us discuss the purpose with regards to sustainable preferences. We try to analyze the preferences of different investor types and or investor groups when they face a choice and trade-off between traditional investments and other investments dedicated to specific sustainability attributes. Orme 2014 describes different conjoint methodologies. Selecting the appropriate methodology depends on the research situation. So we first mention the classic ratings-based systems. By applying this methodology, the respondent rates and/or ranks are series of concept cards. Each card presents a product concept consisting of multiple attributes. An especially high number of attributes requires more cards that must be presented to the respondents in order to obtain solid results. But this also implies that respondents may burn out. As a result, this may lead to unsuitable answers from the surveyed group because the respondent loses the overview. The advice is to work with a low number of attributes, and very often only 4 attributes are used. The second methodology is the choice-based conjoint analysis. Instead of scoring product concepts, the respondent must identify one product he or she wants to purchase. This approach simulates the behavior on a real market. Drawbacks are that this approach does not measure the preference level of one product compared to another. Additionally, it does not provide further information about the preferences for rejected products, which is a mess. We come to max-diff scaling. Max-diff, an analogy to conjoint analysis, evaluates if the attributes qualified as most and least relevant by the investors coincide with the actual choices made in the conjoint analysis. Max-diff scaling is often referred to as best-worst scaling. Again, it is the examination whether the attributes qualified as most and least important for the participants correspond to their actual choices made in the conjoint analysis. The max-diff methodology allows for cross-attribute comparisons, while conjoint analysis allows for intra-attribute comparisons. Both methodologies are applied in the papers in the reference list. The questionnaire structure is very important for all methodologies. Of course, it has to be structured according to the given research questions. On the other hand, it has to be adjusted for different target group respondents. For example, for asset managers and financial advisors, for retail investors, institutional investors, and so on. Other methodologies used in the literature not mentioned here are adaptive choice-based conjoint, adaptive conjoint analysis, and partial profile choice-based conjoint analysis. According to the table of contents, we now approach the section titled Knowledge about the preferences of conventional investors. For conventional investors, financial-oriented goals have top priorities regarding risk, return, liquidity, and so on. Investors prefer higher return, lower risk, higher liquidity. In theory, investors make rational decisions, but we had to learn that this is often not the case in practice. Behavioral finance explains why and how investors are influenced by human emotions, biases, and cognitive limitations of the mind. In the past, investors, on average, did not consider sustainable attributes in their decision making. Okay, so we approach the next section, which is expected changes for sustainable investors. We assume that sustainable investors consider sustainable attributes in their decision making. Regarding the integration of sustainable attributes, sustainable investors do not form one homogeneous group, but that we face several inhomogeneous groups. Based on existing literature, we expect preferences to be driven by special attributes, all characterized by specific levels, like preferred fund name. As sustainable investors in their decision making are influenced by names, which they connect with sustainability, with more sustainability, less sustainability, and the sustainability rating, like the Morningstar sustainability rating, historical returns from lower to higher rates, asset class respective financial vehicle, like public and private stock and bonds, mutual funds, social impact bonds, green bonds, and so on. The geographical area in which the investments are done, and the length of the track record of the asset manager. We now approach the literature review. This slide gives an overview on the papers which we will check. There is a paper by Roundy, Holzhauer, and Dye from 2017 in Social Responsibility. The second is by Dorfleitner and Utz from 2014 in Qualitative Research in Financial Markets. And the third is by Arbabi and Manichetti, 2020, a working paper. The paper review is very short. I tried to reduce it to 3 points: purpose and research question, methodology, and findings. And you are invited to read the papers in detail and to check what has been done so that you learn much more than what we explain here. Let us start with Roundy from 2017, the purpose and research question. Due to the increased number of impact investors, the study tries to identify characteristics or attributes of impact investing. The differentiation criteria between impact investors and traditional investors. The question if and how impact investors differ from traditional investors. The question on drivers of impact investing. And last, they try to find out the evaluation criteria applied by impact investors to identify sustainable investments. The methodology is based on a partially inductive study based on semi-structured interviews with 31 investors. The study was conducted to explore how the motivation of impact investors differ from other classes of investors. In addition, it assesses how sustainable investors evaluate sustainable ventures. The findings prove that impact investors represent a unique investors class. They clearly differ from socially responsible investors, from venture capitalists, angel investors, traditional philanthropists, or other types of for-profit investors. We approach the second paper, which is from Dorfleitner and regarding purpose and research question. This is an analysis of investors' motives to allocate their money to socially responsible investments. The authors investigate whether preferences, educational level, or wealth are related to investment decisions. Investors are characterized according to their readiness to sacrifice financial returns for social responsibility, the willingness to pay. It's also called like that. A multivariate model is applicated to investigate the determinants of socially responsible investing. As a methodology, the authors collect data via online questionnaires. They apply multinomial logic models to measure the relationship of factors with the following dependent variables that mimic socially responsible related investors. The variables are investment volume in socially responsible mutual funds, the percentage of socially responsible invested capital in the entire portfolio, investors' willingness to sacrifice returns for a highly sustainable investment. What are the findings? The multivariate analysis, which investigates determinants of socially responsible investing, indicated low significance for demographic factors, gender, and investment volume. The authors found out that high expected financial returns is an important inducement for socially responsible investors. Women and people with a higher educational level are willing to abdicate higher returns for socially responsible investment. And respondents with high investment volumes are significantly more familiar with socially responsible investments. And we approach the third paper by Ababi and Menichetti. The purpose and research questions are twofold. The first question asked if you, as institutional impact investors, on average, are more committed to impact investments compared to European institutional impact investors. And here is the second question. Compared to European institutional investors, do US institutional impact investors have different sustainable preferences when making an investment decision? The methodology is a choice-based conjoint analysis. Respondents are provided with a set of products with different attributes, asked to select their preferred one. The following table shows attributes and their levels. So you see the attributes are financial performance, GIIRS rating, asset class, development stage. And you see the levels. There are always, for all attributes, there are 4 levels given. Regarding the findings, the authors state that, on average, institutional impact investors show a higher preference for the sustainability factor than for the financial factor. That US investors are more committed to impact investing than European investors in all aspects. So type of investments, percentage allocation, and commitment period. That US investors show a higher preference towards the financial dimension rather than the impact dimension. And so I have to add, compared to a European impact investor. And on the other hand, for European investors, the impact dimension is the most important attribute. So it's interesting to see the difference between US and Europe for the same type of investors, which is possibly based on cultural differences. Possibly. There are several explanations. Read the paper. Well, and according to the table of contents, we now approach the reference list, and with that we come to the end. Have a look at the first slide, slide 31. On that page and on the following page, we have the important papers for conjoint analysis, as well as the papers used in the literature review. Well, ladies and gentlemen, thank you very much for your interest and your patience. After having worked on this chapter, now you should be ready to start your own study on preferences of sustainable investors. I think we helped you a lot. You have a good introduction now. Many very interesting questions still remain to be researched. And this offers you now many opportunities for your thesis projects, for example, if you want. So with this hint, I finish this chapter, and I wish you an interesting time in the following chapters, and all the best for your future. Bye-bye.